Australia's interest rates have hit a 7-year high after the nation's central bank decided to increase the cash rate for the 5th consecutive month in a row. The Reserve Bank of Australia, RBA, today decided to lift the cash rate target by 50 basis points from 1.85% to 2.35%. The last time Australia's cash rate was higher was in December 2014, when it sat at 2.50. Read more. The RBA cash rate that would plunge majority into mortgage stress. Today's decision means a borrower with a $500,000 loan would have repayments increase by $144, while a borrower with a $1 million loan would have monthly repayments increase by $288. Since May, when the cash rate was a now long forgotten 0.1%, that represents an increase of more than $600 a month for those with $500,000 loans and an eye-watering 5-month increase of more than $1,200 for those with more than $1 million owing on their mortgage. Worse yet is that more rate hikes are tipped to come. Big Four bank Westpac is currently predicting the cash rate will hit 3.35% by February next year, which if realized pushes the average variable rate close to 5%. Read more. ONS predicts massive drop in housing prices through 2023. While we're likely to be well over the halfway mark, the RBA has at least 2, but potentially as many as 5, rate hikes still in its sights. Rate City. Com.au research director Sally Tyndall said the average borrower could see their variable rate rise to over 6% in a matter of months, unless they take action. People on a variable rate might feel powerless right now, but that doesn't have to be the case. Refinancing to a more competitive rate will help mitigate future RBA hikes. Read more. The Aussie neighbourhoods worst hit by mortgage stress. Federal Treasurer Jim Chalmers addressed the Reserve Bank's interest rates rise during question time, saying the decision will put more pressure on families. The fact that we knew it was coming doesn't make it any easier for people, he told Parliament. This is tough. This will tighten the screws on family budgets. This will put more pressure on a lot of Australians who are already stretched enough. Chalmers also outlined how much the rate hike will cost mortgage holders. Average homeowners owing $330,000 will have to find about $95 more for repayments, he said. For Australians with a typical $500,000 mortgage, it's about an extra $145 a month in addition to the extra $475 they've had to find since rates started raising before the election in May. So interest rate rises do mean that Australians will have to make more hard decisions about how to make ends meet. Read more. Landlord's Dilemma, His Tenants' Pain, The Double Face of Rate Rises. Graham Cook, head of consumer research at Finder, said today's hike was another expense heaped upon a general public that was already enduring high petrol, grocery and housing costs. This 5th rate rise since May piles on the pressure for Aussie homeowners, who will have almost $10,000 less to spend on groceries, clothing and holidays compared to only 6 months ago, he said. Cook believes many borrowers who fixed their loans during the period of record low rates might suffer from bill shock when those fixed terms expire. Fixed loan holders are in for a big shock once that rate expires and their payments spike, he said. Our figures show the average fixed-rate homeowner will be paying $600 extra per month come December. If you're on a fixed rate, check now to see how much your repayments are likely to jump. The information provided on this website is general in nature only and does not constitute personal financial or legal advice. The information has been prepared without taking into account your personal objectives, financial situation or needs. Before acting on any information on this website, you should consider the appropriateness of the information having regard to your objectives, financial situation and needs.